All right, welcome to the July monthly market report from Keeping Current Matters. It's good to be here with you. We're at the midpoint of 2025, starting the second half of the year, and we're going to talk about everything happening in the market. Certainly, right now, mortgage rates are a topic of discussion. Seeing a little bit of relief here in the first part of July when I'm recording this. But we're going to talk about builders today. We're going to talk about a buyer-seller imbalance that's happening right now. But most importantly, I'm going to give you everything updated forecast-wise for the second half of this year. You're going to want to grab that, share that with your team, have that for yourself, because it's interesting to see what forecasters are saying about the second half of this market. So with that as sort of a backdrop, we'll go ahead and get started. Let's start right here. And the bottom line is buyers should be looking at new construction right now. Let me just say this before I get started. I mean, so many people listen to the monthly market report, and some, are like, David, I don't work with builders, or, I've had trouble working with builders. I want to give you this from the perspective of what's happening in the market. Whether you're active with builders or you're not, you still need to understand what the options are for buyers right now, what's happening in that market. The first thing I would say is newly built home inventory has continued to rise, and we sit right now at 9.8 months supply. This is a look going back from the last year in the months of supply in new construction across the country. We're higher than what we've been in new construction. So it's certainly an option that people that are thinking about buying should consider as they kind of go about their home search. And what makes this so interesting right now is this fact that Zonda published here recently: 57% of new home communities in May offered incentives to be built on to-be-built homes, and 75% of quick move-in supply. So think about that: 57% of new homes being offered incentive. Ones that are built on the ground, 75% of those, and builders certainly are using their ability to sort of manipulate things with incentives to drive volume there. And even if you've seen some of the reports on optimism in the builder community, they're not as optimistic right now as what they have been. But the bottom line is they're using a lot of this to buy down rates. This is a look at mortgage rates. The average 30-year fixed on an existing home, which is in blue there, and a new home, which is in green. And so the average 30-year fixed on a new home is about a half a point lower than what it has been on an existing home, because builders are using that incentive. Realtor.com said this: one of the main reasons that mortgage rates are lower for new homes is that builders are offering below market rates to buyers as an incentive to close deals, primarily through mortgage rate buydown. So while the average rate is lower for a new home than an existing home, builders are taking sort of this concession, or this money that they have. They're buying down the rate, giving the buyer a more affordable solution for the home that they're purchasing. And listen, with affordability being a challenge, they're going to continue to do this. And you may have seen maybe some of the articles on builder sentiment, not as high right now as it has been, because they're having to do all these things to move the inventory that they have. And in another fact right here, you see it from the National Association of Home Builders, more and more builders are cutting their price. This goes back, April, May, June, and you see kind of that rise up. 37% of homes and builders cutting the price on those homes. So offering an incentive on the mortgage, cutting the price, doing whatever they can to get these homes sold as inventory has risen. I think that this fact, I'll go on to say this, the survey really, 37% of builders reported cutting prices. That's the highest percentage since the National Association of Home Builders began tracking this figure on a monthly basis in 2022. So, somebody buying right now, I think new construction is something they have to be aware of with rising inventory, the number of builders that are offering an incentive on the mortgage rate, the number of builders that are cutting the price on these homes. Because right now, the supply of homes, whether it's existing or new homes, has risen faster than demand this year. That is going to be the story of the first half of 2025, that demand has not followed, where inventory is. We're seeing inventory rise all across the country. We talked about that last month on the monthly market report, about how many areas, the West and the South have recovered from pandemic pre-pandemic levels of inventory, and it's created sort of this, what I call right here, the buyer-seller imbalance. And maybe you saw this posted somewhere. It's been up in several places over the last several weeks. Redfin posted this: the buyer and seller dynamics in this country have shifted. This is a look at in green there, the number of sellers in the market as compared to the number of buyers. 1.9 million sellers, 1.4 buyers there, just hypothetically. Now, I think there are a couple of things we have to remember here. There are still in this country more people that want to buy a home than there are available homes for them to buy. They just can't do it because of affordability, and they're sort of be put on the sidelines, for lack of a better word, in their quest to own a home. The Associated Press said this: fewer buyers means less competition for listings and more pressure on sellers to dial back their asking price and make other concessions to help get a deal done. That's a stark reversal from just a few years ago, when it wasn't uncommon for home buyers to receive offers well above their asking price from multiple home shoppers. We live in a world right now in real estate where some markets are sort of even, some markets are still hot, some markets, seeing inventory rise across their market and sellers having to make concessions. But even if you go back to what we talked about, we know price concessions are rising as inventory has risen. And if you're selling a home, you have to be aware of that and have to be aware of the dynamics that are in the market. I switched to mortgage, sort of provider of technology. They say we continue to see an inflection in the housing market as home price softening expands beyond the Sun Belt into the West. With inventory levels beginning to normalize across much of the country, prospective home buyers are finally beginning to see some long anticipated price relief. So depending on the market that you're in, it may not be telling you anything you don't already know. I was speaking to a group recently in the Northeast, and they're like, look, that is not happening. Our market prices are still rising. Multiple offer scenarios are still happening. And that certainly is true. But in a lot of the areas, certainly in the Midwest, in the South, down in Florida, we're seeing prices soften. And I think in this country, the word that I would use, and I'll give you a look here at it from Zillow, is home price growth is decelerating right now. Some markets are down, and I'll show you that. But this is a look going all the way back to the beginning of 2019. And we just know the story of 2020 and 2021, extreme amounts of price appreciation. And that number's come down pretty significantly over the last couple of years. You see the drop there with the rise in mortgage rates. And we sit in sort of a place here where there's probably anemic price growth at best nationally. And I'll get into that in just a minute, what forecasters are saying about the remainder of this year. But no doubt price is not rising at the rate that it was over the last couple of years. National Association of Home Builders, again, home price growth slowed in the first quarter of 25, partly due to a decline in demand and an increase in supply. Persistent high mortgage rates and increased inventory combined to ease upward pressure on housing prices. These factors signal a cooling market following rapid gains seen in previous years. The bottom line is price is going to be different in just about every market. A couple of years ago, everything was up and to the right, prices were growing, but 22 of the largest metros right now have falling home prices. You see led by Tampa, Florida, and Austin, Texas there, following year over year, May 24 to May 25, about 5%, a little over 5% price decrease. Now, what I will say about this is, both of those markets saw extreme appreciation over the last 5 years, certainly not going below that. But, if a market is risen by 50 or 60% and home price appreciation comes down 5%, so you're still in a very strong position, obviously, price-wise. The majority of these here, somewhere around 2 or 3% down, but you see the others that are up anywhere from 2 to 3, 4%. In the top 50 metros, I think you could see that number shift over a little bit as we see this market sort of wait to see what's ahead. And I think we all are waiting to see what's ahead. I think supply and certainly the velocity of sales will be determined by what's ahead for mortgage rates. So let's talk a little bit about what's ahead for the second half of 2025. I think that's something that people are curious right now as we stand here in July and start to look to what's ahead for the remainder of this year in a market that has been largely slower than I think a lot of us would want in the number of transactions, but certainly a market where I think there are people that are winning in this market, certainly a market where others are trying to find their way. And depending on which area or which side of that coin that you fall on, I do believe having the facts and knowing what's ahead will set you apart from anybody else in your market. But Greg McBride said this from Bankrate. He said, home price appreciation will be tepid when looked at from a 35,000 foot view. Many markets seeing little or no change in prices, but rising inventory has some formerly hot real estate market shifting from a seller's market to a buyer's, and we will be susceptible to price decline. So I think the bottom line is right now in this country, we will see more sort of anemic price growth. It'll be price growth that just is sort of, Goldilocks kind of style, not too hot, not too cold, just right there, maybe 1% to 2%. If you look at 2025 forecasters right here, we've got 8 forecasters that have updated what they're saying about 2025 home prices. This is as of the 2nd of July, average 1.9%, 2 falling negative that are reporting right now, Redfin and Zillow, the others somewhere between 2 and 3% home price appreciation. I think that's a fair look. Again, will be different from market to market. Mike Simonson from Alto said this: the vibes for home prices are growing much more bearish. For the rest of 2025, we can see that inventory levels, especially in the Sun Belt, are now sufficient to put downward pressure on home prices. This seems likely to continue and spread to more states. However, there isn't much in the data that shows significant price declines. Now, if you take this look, and I'll show you in just a minute where where forecasters started the year to where they are now, we see them getting a little less optimistic. Mike says here, getting more bearish. But if you look at this right now, the 8 forecasters that we have listed and what their current forecast, where do they start? Fannie Mae started out 3.6%. They've risen to 4.1%, but you see the orange and the red, the forecasters that have fallen. So a few have gone up, but the majority have gone down to say, I don't think we'll see as much home price appreciation right now in this country. And a lot of that is due to rising mortgage rates. Now, again, we're sitting here at the front end of July, so a little bit of relief in the last couple of weeks on mortgage rates. All of that will be determined by incoming data. Certainly don't have a crystal ball on that, but I think we will see a little bit of relief on that. James Egan from Morgan Stanley said, looking ahead through the rest of this year and into 26, we don't expect mortgage rates to come down much, at least not through the third quarter of 2025. So affordability will remain pressured. I think that's going to be the story of this market. Affordability has pressure on it, and folks, want to buy homes but aren't able to based on their, financial position. To further back this up, what James is saying, not to expect big drops in mortgage rates. This is a look at forecasts from Fannie, from MBA, from Wells Fargo through Q3 of this year through Q2 of next year. And you see somewhere around 6.4% over the next year, let's call it, in the average 30-year fixed mortgage rate. I think a couple of things about this. Probably a very sober forecast. I don't think anybody wants to get aggressive on mortgage rate forecast right now. I think things continue to get more known, if you will, economically, and trade deals and things like that. That will benefit the mortgage market. What the mortgage market does not like is uncertainty, and we have lived in a world that has had a lot of uncertainty, economically speaking. So, if you look at this on a graph, this is what this looks like. Much more flat look at mortgage rates, somewhere maybe in the range of 6.5, getting below 6.5. And I think these certainly aren't as aggressive as what we saw towards the end of last year, but probably more in line with reality based on what we see happening in the overall economy. Selma Hepp said this: the prospect of elevated mortgage rates through 2025 suggests the housing market activity will continue to be challenged. I think she's talking about their sales and the velocity of sales. Certainly, I think that will not cause the market to explode and to see a lot more sales as folks are starting to way. Can we afford to buy a home? Can we get back into the market? Slowly, people will come back in. I've mentioned this several times. I do believe affordability in this country will continue to get better based on wages, prices, and income growth in this country. And so we're going to continue to stay on top of it here at Keeping Current Matters. But what we're looking for is, okay, what's going to be the outlook for mortgage rates as we go throughout the second half of this year? What is going to become clear, economically speaking, as we get closer to the end of the year and into 2026? Sales will remain low, but up slightly from last year. This is a look at existing home sales. And you see the forecast from those that are listed in our MBA, Wells Fargo, Fannie, and Zillow. All of them showing slight increase in existing home sales as of the middle of this year. That will certainly be determined by the velocity and trajectory of this market. New home sales are going to remain, for the most part, unchanged. There's a slight chance. Some of these forecasters are saying we'll sell a few more homes than we did, a few more new homes this year than we did last year. So what am I saying here? Mortgage rates weighing on the market, few more existing home sales, maybe a few more new home sales, but year-over-year sales likely to be sort of in the same spot as where they've been over the last year. And I think this is the market. I mentioned it before that that folks are looking around going, okay, what do I need to do different? Part of that is being the expert and bringing everything to the clients that you serve and saying, hey, here's what's happening in this market. I want to help guide you forward. Realtor.com said this. Chief economist Robert Dietz says that given the current market conditions, the home builder trade group is forecasting a decline in single family starts across 2025. So they're saying, hey, we're not as optimistic. We're not starting as many homes on our watch right now, and want to see what's going to happen economically. And you're seeing this happen right now, even January through May right now. Fewer new homes, getting started. We want to pay attention to that and say, okay, how's that going to affect the market the second half of this year, the first half of the year next year? Danielle Hale said this: shoppers in the market for a new home will still have options, and many markets are likely to be in a good place to negotiate, but builders are already adjusting their outlooks and slowing the development pipeline, which could mean that new homes are harder to come by in the next year. Certainly true. I think all of this information, when used by the professional, is someone that's able to guide their clients forward. I was at an event a couple of weeks ago, and there was a slide that said, your identity is your reality. And that's what I would maybe leave you with, is your identity right now is your reality. If you see yourself as the expert, as your identity, that will then be your reality. If you don't see yourself as the expert, certainly you want your clients will see you as the expert. Keeping Current Matters, we do this every month, the monthly market report, to give you what you need to understand the market, have a conversation, and talk about what's happening. What are the most important topics? We do it because of this. We believe most agents know what's happening. Good agents understand what's happening, but only great agents can explain what's happening. And my encouragement to you would be to use all the tools from KCM to explain what's happening in this market right now, so that you can be the solution for the clients you serve. As always, it's great to be on the monthly market report. Good to be with you here in July. We'll see you back next month, and have a great summer month here in July.